Hello traders, and welcome to another video here by In the Zone. Today's video we're going to be talking about the pivot range. And for those of you who aren't familiar with the pivot range is a concept that goes along with Mark Fisher's logical trader, the ACD method. He combines his opening range method along with the pivot range. It's a layering effect. And so let's get into this and find out what the pivot range is and how you can use it. So the pivot range is a range that identifies the meat of the market, is what Mark Fisher would call it. And it's likely to be support or it's likely to be resistance depending on where you closed in relationship to it. So this pivot range helps you identify an area where you're going to see buyers likely show up or you're going to see sellers step in and start to sell. So the way to look at this is that if price is above the pivot range and it's approaching the pivot range, coming down towards the pivot range, it should find support somewhere in that pivot range, okay? And it should bounce off and move in the opposite direction. But if price is below the pivot range and it's moving up towards the pivot range, then it should find resistance at pivot range. Now, if price can push through the pivot range from whichever direction it's coming from, then that's a great signal. It's letting you know, hey, this pivot, let's say the pivot range was supposed to be support, okay? But price is able to push down and go all the way through the pivot range. Then that lets you know that support has failed, okay? And then you'd want to be watching, like they say, old support becomes new resistance, and vice versa on the, if the pivot range were meant to be resistance for the day, however, price was able to push up and through and get through the other side of the resistance, and the resistance would have failed, okay? So let's get into how to calculate this pivot range. And the pivot range is based upon the prior day's action, and then you'll use it in the next day, okay? And so the pivot range uses the high, low, and the close of the prior session to calculate the pivot range. Now there's 4 steps, and we'll walk through these 4 steps. Step 1 is to take the prior day high, low, and close and add them together and then divide by 3. And this gives you your daily pivot. Most of you should already know how to do that, and most of you might be familiar with the daily pivot. And so that's step 1. We need to find out what the daily pivot is, and you can see here in this example that we've got 1106.50 as the high, 1096.25 as the low, and a 1103.50 as the close. You add those together, you get 3306.25. Divide by 3, you get 1102.08. So your daily pivot is 1102.08. Step 2 is to take the prior day's high and low and add those together and then divide by 2. And this gives you what I call the high-low number. So you would take 1106.50 plus 1096.50. That gives you 2202.75. Divide by 2 gives you a 1101.38 high-low number. Okay? So now we're going to take the larger, step 3 is going to take the larger of those 2 numbers, okay? From the daily pivot and the high-low number, and subtract the smaller number from the higher number, okay? And this gives you the factor number, all right? So in this case, we'd take the daily pivot, 1102.08, minus the high-low number, 1101.38, and that would give us a number of 0.70 for a factor number, okay? So now step 4 is we're going to add that factor number to the daily pivot number, and we're also going to subtract it from the daily pivot number. The resulting 2 numbers becomes the pivot range. So the daily pivot plus 70 cents gives us 1102.78. The daily pivot minus 70 cents gives us 1101.38, and that becomes the pivot range. So the pivot range runs from 1101.38 up to 1102.78. Now that we have the pivot range, our first question that we have to ask ourselves is, where did we close in relationship to that range? Okay, so if we go and we look at our close was 1103.50, which is higher than that pivot range. So that pivot range should be support the next day. Okay, and so you can mark that pivot range on your chart, and you know that if price were to open and above the pivot range and price were to start to sell off and move down towards the pivot range, you would expect price to find support there, and you would expect price to to reverse there and bounce off of that support and continue to move higher. Now, if the close had been below the pivot range, then you would expect resistance at the pivot range. Okay, and so if price moved up towards that pivot range, then you would expect it to find resistance there and get turned back down and go lower. Okay, so one thing that I want to talk about though is that if you close above the pivot range or if you close below the pivot range, you need to have confirmation the next day, and that confirmation comes in form of the open. Okay, so let's say that you closed above the pivot range on the prior day. That gives you a bullish outlook for the next day. Okay, and you're expecting that pivot range to be support. However, if the market opens below the pivot range, the opening print, if it's below the opening range, below the pivot range, then that tells you that the support has failed. And so now you'd want to flip your bias from being bullish to being bearish, and you'd want to use that pivot range as resistance. Okay, same thing would happen in the case that you close below the pivot range. You're expecting that pivot range to be resistance the next day. However, the market opens above the pivot range, you now have to flip your bias, and your bias has to be bullish now, and you're going to treat that pivot range as support instead of resistance. So that's how you use the pivot range, and that's going to do it for this video. And hopefully that the pivot range is a pretty easy concept. It's a great way of having a bias going into the day to understand what you're expecting for the next day, either support at that area or resistance at that area, and then you're using the opening print to confirm that. And like I said, it's a great little tool, and Mark Fisher uses it in conjunction with his opening range and his A points, and we can get into that a little later in a different video, but that's going to do it for right now, and see you guys later.